Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
Hey, that's right. I am Mark Eitel, host of the Mr. Mortgage Show. And text us your questions or call in with questions to 561-291-8569. Dom is with me this morning, manning the board, and he will handle your questions for you. So another happy Saturday here in my world. I hope it's the same in yours. But we are always excited to come to you on a Saturday morning and appreciate you spending some of your weekend with us. So as always, we kind of cover some key topics in the mortgage and real estate world to start the show. And, I don't know what the term is, 900-pound gorilla in the room is interest rates. And I'm going to go ahead and talk a little bit about rates and then talk about why they are maybe not as important as we make them out to be, or at least in the current environment, they're not as important as we make them out to be. So as you remember from last week, we talked about the Fed made the quarter point move, and there wasn't a lot of activity in the mortgage interest rate market, as the overnight rate that the Fed controls has not a direct effect on mortgage rates anyway. However, it does establish a trend and overall rate environment movement, if you will. So everything was calm, and we were bouncing around in that trading channel that we've talked about for weeks now. But this week, early in the week, I think it was on Tuesday, the Fed came out, the chair, Jerome Powell, and said he's prepared to move more aggressively if necessary. And that caught everybody off guard because there's a couple different ways that the Fed controls interest rates in relation to inflation, and then one of them particularly controls or influences mortgage rates, and that's the balance sheet runoff. So nobody really knows what he meant by that. Is he going to raise in larger increments more often maybe than he originally had thought? But nonetheless, that kind of threw a little bit of a ripple into the market, and we saw rates bump up a little bit this week. And I stress little bit because these moves are incremental. They're not big jumps. And I want to encourage everyone to take the headlines with a grain of salt, because one of the headlines that I read yesterday was interest rates soar. Did you hear that? Soar to now more than 4%. Well, I don't know about you, but when I think of the word soar, I think of, like a launch, like a big jump upwards, like a plane taking off, or a big bird lifting off. The rates, as we talked about last week, I don't have last week's chart in front of me, but I think it was 4.19 or 4.23, somewhere right around there. The big soar that the LA Times talks about was all the way up to 4.42. So that's not a soar, that's a little bump. And it's all anticipated. We all knew that we were going into an increasing interest rate environment. So don't read the headline, chuckle at it if you must, but then read what's underneath the headline, because often that's where the real data lies. So I was a little disappointed by that. A lot of people seem to be jumping on the interest rate bandwagon. And I know for me personally, because I'm in the business and I geek out on this stuff, I watch the real-time movement of rates all day, every day. So I'm watching candlestick charts and looking for crossover patterns and waiting for an inverted yield curve. But none of that really matters. I mean, you still have to wake up, you still have to go to work, you still have to put gas in your car, buy groceries, and make a house payment. So the difference between an interest rate of 4.25% or 4.5% is not going to change your life, and it certainly should not deter you from making the decision to purchase a piece of property. And that's where I see people getting hung up. It's almost like we watch the weather during storm season, and we're glued to that television for 18 hours, and the weatherman rolls up his sleeves and pulls his tie off, and he's explaining. And I'm making the hand motions in the studio. Dom's laughing at me. I look like I'm landing an airplane. But the weatherman makes the big motion with his hands and tells us the trough is going to pick up the storm and sweep it away, and we're all going to be okay. Well, we're all stressed We're all nervous as hell sitting at home watching the weather. Is my house going to blow away? Is it going to rain? The weatherman's having a blast. He's geeking out on the technical side of it. That's me with interest rates. But you, as a consumer, needn't concern yourself with the little tiny incremental rates. And I want to share a story that happened this week and really set it home for me. Was I was in the office and we had a pretty substantial rate move one particular day. And at the time, it was right around 60 basis points. And it hadn't changed any pricing in the mortgage market. It was just the real-time intraday movement. And by the end of the day, it had moved back to where it started. So none of this means anything except for my point in don't get caught up watching the minute details, just look at trends. And one of my partners, who is far smarter, and it's not fair because she's also more attractive than I am, so it's not fair that she's pretty and smart, but nonetheless, she, we were having the conversation and I was geeking out on how significant the move was, and I was excited by that because of all the ancillary effects and, what's causing it. And she said to me, well, Mark, that's super exciting, but what is that going to do to the interest rates? I have to lock these loans. Does it make sense to wait until tomorrow, or what are we talking about? What's the best case scenario with this move? So I quickly did a little math, and I'm guessing if we would have continued the rest of the day with that trend, we might have picked up 1/8 of a point. So 1/8 of a point on the interest rate for the loan that she was talking about locking for me was $13. So here I am, all excited, and I'm geeking out on watching the charts, and I'm thinking, all right, it's a great lock environment, I'm talking about $13. And somebody sitting at home who's waiting for the rates to fall back in the 3s or the high 2s before they make a decision. Well, first of all, that's not going to happen anytime soon. And secondly, all you're doing is you're stressing out over the details, and you're going to miss the opportunity that's in front of you, if there is one in front of you, because interest rates are going to continue to trend upward for the near future. So I just share that because I think the magic in all of this is look at your budget, not necessarily the rate. And let me qualify that and say everybody's entitled to the best rate they can get the day they lock. Absolutely. I will never, never, never argue that. It's a practice of ours. We pride ourselves on always locking the best rate of that particular day. And me personally, I try to even time those little 8-point moves for my clients, but I don't share that with them because I don't want them to get caught up in it. But my point in all that is, yes, go after the best rate possible, but don't wait if you've got a good opportunity in front of you. Look at your budget, not the rate. Now, we shared a story last week where a gentleman was buying an FHA, buying a property with an FHA loan, and he was putting 3% down, and his payment was working out to be less than the rent payment on an average 3-bedroom, 2-bath house. So if that guy would have been hung up or wrapped around the axle over, should I hang in there and see if I can get a better interest rate, he wouldn't have made that move. So he was concentrated on his budget, and he's going to put his family in the house they want to live in, and his kids are going to go to the schools that he wants them to go to because of this purchase. So think about budget, don't think about rate, and don't beat yourself up because your neighbor got a better rate 6 months ago or last year. I'm working with a self-employed borrower right now who, because of the way they file their tax returns, needs to use a bank statement loan program. Well, the bank statement loan program has a slightly higher interest rate than a conventional loan, which has a slightly higher interest rate than an FHA loan. And this gentleman was at a beer and barbecue party this weekend, and last weekend rather, and I talked to him about this Monday. He shared with his friends how excited he was that he was buying a house, and naturally the conversation, as it always does, turns to, what rate are you getting? And he shared his interest rate, and his buddy said, man, you're crazy. Why would you do that? I bought last year with an FHA mortgage, and I got an interest rate of this. And the two things to keep in mind in that story is last year and FHA. Very different times, very different programs. Luckily, this guy's smart enough not to let that interest rate be the only thing that governs his decision, and he's looking at his budget, moving forward and capitalizing on the opportunity. So, hey, that's the break. When we get back, we're going to dig into your questions, shoot those questions to us, 561-291-8569, or visit the web, www.mr.mortgage. That's mr.mortgage. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right. You heard the man. I'm Mark Eitel. This is the Mr. Mortgage Show, and you can get a hold of us here in the studio on the Anytime hotline at 561-291-8569. That's 561-291-8569. Dom, my producer, is manning that phone line, and he'll get your questions over to me. Also, too, I call that the Anytime hotline because it pushes to my office during the week. So if there are questions or comments that you have and you want to reach us during the week, that number also rings at my office Monday through Friday. So 561-291-8569. Actually, too, I've even been known to spend the rest of my Saturdays in the office after the show, but I'm going to try to sneak out and play a little golf today. So anyway, you can also shoot questions through the website to the Contact Us link there at www.mr.mortgage. That's www.mr.mortgage. So I just I shared that in the opening segment, budget versus rate, because I think too often we get caught up in that vanity metrics of interest rate, and we're influenced by the people around us who, I'm sure, to use the guy at the barbecue, I'm sure his friend was well-intentioned and thought he was doing him a big favor and sharing an opportunity with him. And I know it wasn't nefarious and he wasn't busting his chops, but the reality is that sitting down on Monday, we discussed the options, and for him to qualify for a conventional or FHA loan would require him to either refile his tax returns or wait until he filed his tax returns differently moving forward, which either way would have resulted in him paying more taxes and missing the opportunity that was in front of him from this particular purchase standpoint. So we sat down, we chopped up the numbers, and he's looking at budget and rate, just not getting hung up only on rate. So that's why I shared that story. Only because it's becoming more and more of a conversation. So as promised, we're going to dig into the part of the show where we're answering your questions. I know Dom is giving me the signal that one has come in, so I'm going to throw it over to Dom. What do we have?
Brandon from the text line asked, my dad has offered to sell me his house for the same amount he owes. Can he add me to the title so I can refinance it into my name only? How special is that? You know?
Right? Dad is looking out for Brandon. So Brandon, if I'm understanding you correctly, your dad is basically going to give you the house, but he doesn't want to give you the mortgage. You're going to have to, he's not going to pay the mortgage off. You're going to have to take over the mortgage, right? So in theory, I get what you're saying, right? Just have dad add you to the deed, right? And then you would refinance the mortgage into your name only. You're almost there. You, in theory, this makes sense. And the way you need to structure it's different, but it accomplishes the same thing. So what needs to happen, because you don't currently own the property and you're not currently on the mortgage, so it's not that simple. You're going to have to qualify for your own mortgage, but you can do that by purchasing it from dad, and he gifting you the equity. So I'm going to use very round numbers. This happens all the time, especially as our parents get a bit older in life and they're wanting to pass the property to us in creative ways, or who knows, maybe dad's going to move to a condo on the beach and he doesn't want to maintain the home anymore, but he wants it to end up with you, and you may or may not be in the position to purchase something outright. So anyway, I'm not going to go into why this may be happening, but it's an opportunity that we see presented to children all the time. So to answer your question, it's not as simple as just adding you to the deed and then you refinancing the mortgage, because the mortgage isn't yours. So dad can sell you the house and gift you the equity. So I'm going to use round numbers because that's the easiest way to tell a story. Let's say dad owes $80,000 on the property. Or let's say he owes $120,000 on the property, and the property is worth $200,000. Well, dad can sell that property to you for any amount over the loan amount up to the value of the property. So let's just, again, use round numbers and say he's going to sell it to you for $200,000, but he's going to give you a gift of equity of $80,000, which means you would get a purchase mortgage for the $120,000. So mathematically, it's really kind of lining up the same way that you described. You'd be refinancing that $120,000 loan that he currently has. But in this case, you'd be purchasing it from him with a $120,000 loan. And instead of bringing money to the table for down payment, closing costs, or prepaids, remember the three buckets that make up cash to close, all of that can be covered in his gift of equity. And assuming that he's lived in the property for more than the required time to forego capital gains tax, he won't have to pay capital gains on the gift, and you wouldn't have to pay gains on the gift. Actually, you know what? Double check that you wouldn't have to pay gains on the gift. I'll double check that. But I haven't seen someone have to pay gains on the gift. But nonetheless, accomplishing your goals, but structuring it slightly different, gift of equity, dad can definitely do that. And assuming that there's enough equity in there, dad could even walk away with a little bit of cash if he needed to. But I'd love to dig in deeper with you on this, because as I mentioned, we see this often, and we're in transactions like this all the time. So if you wanted to discuss it a little further, I encourage you to give us a call at 561-291-8569, or visit the website, www.mr.mortgage. Hit the contact us button. So yeah, it sounds like a great opportunity. It sounds like, dad's setting you up, and what a wonderful opportunity to buy a piece of property in this environment with housing values skyrocketing and interest rates still relatively low. So yay, dad. Way to go, Brandon. But yeah, give me a call. I'll walk you through the details. I can even refer you to a title attorney who could structure the contract for you if you weren't working with anybody who could. So yeah, greatly appreciate that question. And gift of equity might be the easy way to do it. And again, we do it all the time. So hopefully that helps. I wanted to throw a couple things out from the first segment that I didn't get to, because I went off on the budget versus rate thing, because I think it's important, right? And I'm going to try to adopt that and not geek out to the granular level on interest rates. But speaking of buying properties and selling properties, I just pulled a HomeLight study before I jumped on the air today, and they did the HomeLight study for 2022 buyer and seller insights for the last year. And this is interesting to me because we all know how fast things are selling in this market. And a lot of sellers are apprehensive that they don't want to sell until they know where they're going. And we even talked about that. I shared with you one of Juan's pro tips with the reverse contingency strategy. And if you have questions regarding that reverse contingency, I'm happy to get you in touch with Juan or give you more details on that too. But anyway, 10% of sellers who sold their house last year had no idea where they were going to live next, which is mind-blowing to me. I get it, right? They're going to capitalize on all that equity, but most people are afraid to do that. So I guess it's relatively a small number, 10%, but mathematically, that's a lot of people in an Airbnb or at the Hilton on the beach trying to figure out their next move. 50% of sellers in the past year sold their home after living there only 5 years or less, which is against the historical norms. Again, capitalizing on a bunch of equity and making that move. So I just found that interesting. I don't know if Brandon's dad has lived there for more than 5 years, but I found that super interesting that many people were cashing out that early. But yeah, so there goes the siren sneaking up behind me. We are going to move into this break. On the other side of this break, I promise we'll get to more questions, but I encourage you to give us a call at 561-291-8569. That's 291-8569, or visit the website, www.mr.mortgage. Thanks. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, I am back. Mark Eitel here, host of the Mr. Mortgage Show. And yeah, thank you for being with us. Again, the Anytime Hotline, 561-291-8569. That's 561-291-8569. Dom is here to take your questions via phone or text, and we're also watching the email via www.mr.mortgage. So we're going to dig into some more questions. I did want to throw out the rest of those stats because I misread that and I caught myself off guard. But 27% of buyers felt anxiety when struggling with multiple offer situations. I find that surprisingly low because I hear a lot of people feeling that pressure. But that was a surprising number, only 27%. And 80% of people who bought a property compromised on one of the key things they were looking for in a house. So they might have chosen a different neighborhood, or maybe they chose to forego the pool and just jump in, which I think is smart. I think we need to capitalize on the opportunity that's in front of us, especially the way things are appreciating. The sooner you get in, the sooner you benefit from ownership. Actually, I heard something super interesting this week. I start my day every morning at 7 a.m. with a mastermind, if you will. And it's a call-in group of the very top real estate agents from all over the U.S. and Canada. There's some international agents, but that's the most part of it. And I might have shared this before, but it's a super interesting group of people to get a data set from. And they're all sharing very similar experiences that we're going through. But the thing that I found so very interesting was one gentleman shared something that his father had told him long ago. People don't make money by waiting to buy real estate. They buy real estate and wait. And I found that pretty insightful because if you look at the historical charts, with the exception of the housing crash, there's no significant downturn in home values. And even as ugly as that crash was and as long as it lasted, anyone who bought at the peak of the crash is in the money now. So they had to have a place to live this entire time. So it made sense. But yeah, I thought that was super interesting. People make money not by waiting to buy, but by buying and waiting. So buy and hold that real estate. And you got to have a place to live anyway, so it might as well be yours. Anyway, we're going to dive into some more questions. Let's see if Dom has another one teed up for us. What do we have?
I do. We have Julio send in a text. Is there a cap or a maximum amount of cash I could take out with the rec loan? I want to pay off everything before rates get crazy.
Hey, Julio, that's a great question. And I commend you for capitalizing on this. I guess that kind of goes back to budget versus rate, right? Because with that rec loan, rec is reduce, eliminate, and consolidate. So we're looking at your overall monthly expenses with a rec loan. So we're taking into consideration your credit card payments, your boat, your motorcycle, your car, whatever you have. And we're looking at the best use of your equity position. Does it make sense to cash some of that out at these low 4% interest rates and pay off those higher interest rate credit cards and other consumer debt? So there is typically an LTV. An LTV means loan to value. So typically the rule of thumb when you're pulling cash out is you want to keep it at 80% or less of the value of the property. So if your property is worth, $500,000 and you were going to pull 80% of that out, you could go to the $400,000 loan amount, and then whatever your payoff for your current first mortgage is would be reduced would be reduced from that. And I'm hung up on the R in the rec loan, but anyway. Typically 80% is the rule of thumb for pulling cash out. And I don't know how much cash you have in the house or how much debt you have, but it certainly makes sense to look at the rec loan almost as an inflation buster, right? So there's nothing that you as an individual can do about inflation. We're all suffering from it. We're all paying more for everything every day. If you can pull some of this newfound equity wealth out of your property to offset those additional expenses, the Fed moved the interest rate. That means, your credit card payments are going to go up just by the fact the interest rates are increasing. And as that continues, it's going to get worse. So yeah, 80% typically the rule of thumb for pulling cash out. I'm proud of you for thinking about that, and look at all the debt that you can pay off and how that improves your monthly financial outflow. And then if you wanted to, we have people all the time who are saving significant amounts of money monthly, sometimes over $1,000. I mean, all of those expenses that you have for the toys and the cars add up in a hurry. So if you can reduce your monthly expenses by, I'm thinking of one particular young family right now, they paid off everything, and they saved, I think it was about $600 a month. And that wasn't a great big loan, but $600 a month significantly improved their cash flow and took a lot of pressure off dad's neck, if you will, when he's out there trying to make the bills. So I'd love to talk to you more about it. I'd love to see what amount that you're thinking of paying off, and maybe kind of chop it up with you as far as which cards and which consumer debt carry the higher interest rate and where that money might best be used if there's not enough to pay it all off. But yeah, I encourage you to give us a call at 561-291-8569, and we can dig a little bit, a little deeper on that. So yeah, hopefully that helps. Use the 80% rule of thumb. There's some instances where you can go beyond that, but you're getting into a mortgage insurance requirement, and it's frowned upon. But hopefully that helps. So I don't know if we have another question ready or if it's yeah. Okay, Dom's giving me the thumbs up. What do we have, Dom?
We have Marge and Tom called in with this one. If we get a reverse mortgage and decide to sell our house to downsize, is that going to be a possibility?
Hey, I think, Marge, you and I have been communicating via email too. So, yeah, this is a great question. And the reverse mortgage is, it's ironic that this question's right behind the last question when we're talking about equity as inflation buster. A reverse mortgage is the ultimate inflation buster because you're not going to have a mortgage payment anymore, and you're going to have that cash flow from the equity going into your pocket, so it's going to help offset expenses. But I really, really want to talk to you more about this, and I believe, Marge, that you and I have had some exchange via email, so let's continue that dialogue. But so to answer your question, if you sell the house to downsize, and if this is the Marge I'm thinking of, your concern was that you might need some assistance in the future and maybe going into an assisted living or downsizing and relocating closer to family so life is more convenient, because as I remember, you had a big house. But anyway, you just sell it. You sell it and the mortgage is paid off just like any other mortgage. You're not locked into it. I get it. It's a very unique. It's an uncommon program, so a lot of people are not comfortable with it. But you maintain ownership of your home. The mortgage company has a lien against your property. You can take your equity out in a variety of ways. You can take a lump sum payment at closing. You can get a credit line where you have access to the funds over time. It's an amazing program, but the best part is you never make a mortgage payment again. But yes, to answer your question, yes, you can sell the property and you just pay the loan off. There's no prepayment penalty. There's no hook, if you will. It's your house. You can do whatever you want with the property. You can leave it to your heirs, and then your heirs just satisfy the loan, just as if you were to pass away with a normal mortgage on your property. They would either sell the property and pay the loan off, and then the cash would go to the estate, or maybe one of the heirs wants to buy the property from the estate, and it's no different. Think of it just as a normal mortgage. The only strange part about it is that you do not make a mortgage payment. But yeah, let's dig in deeper on that. I'm going to call you because I know who you are, and we've exchanged a few questions throughout the week. So anyone else has a question, give us a shout, 561-291-8569. That's 561-291-8569, or visit the website www.mr.mortgage. That's www.mr.mortgage. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell him you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, I am back. My name is Mark Eitel, host of the Mr. Mortgage Show. And you heard our announcer. 561-291-8569 is the anytime hotline. That's the best way to get questions to us. Dom is manning the board and the phone. Dom the Magnificent. He makes me sound good. I just need somebody to come in here and make me look good for the video segment of this operation we have running here. But yeah, anytime hotline 561-291-8569 or the website www.mr.mortgage. Again, never ever ever a .com. Just type in mr.mortgage and we will magically appear. So last thing on Julio's question regarding the cash out for the rec loan. It got me thinking, and I knew I had this here in my notes in my show prep. I just didn't have my hand right on it during that question. So I found this super interesting. Americans have $856 billion in credit card debt based on this report, which was, I believe, the end of last year. So we have returned to our bad habits. We were all well-behaved during COVID when we were locked in our houses and we couldn't shop. And Amazon was slow to deliver, so we must not have even been shopping with them. But $856 billion with a B in credit card debt. One interesting thing is, though, CoreLogic, their report shows that the American households have $3.2 trillion in additional equity since the fourth quarter of 2020. So that's another 29.3% appreciation. So my point in that is, at the pace of appreciation, there's plenty of money in our homes to pay off our credit card debt. Not probably the way we intended on paying that credit card debt off, but you might want to grab some of that equity, knock down some of that credit card debt, and just behave yourselves with those credit cards from now on. So anyway, I want to keep the show rolling with questions. I just wanted to double back on that because those numbers, in addition to being mind-blowing with billions and trillions, I just found that interesting. So, hey, Dom, do we have another question?
We do. We have Matt that emailed us. He said, I read about a lock and shop approval online. What happens if I don't buy before the end of the lock of time? Do I get my money back?
Hey, that's a great question, Matt. I'm going to explain lock and shop first because I know there's a lot of people out there that have no idea what you or I are talking about right now. So lock and shop is not something we've talked about until very recently, because over the last 2 years or so, rates have been falling. So tomorrow's rate was often better than today's, so there was no need for a lengthy lock. So what lock and shop does, it allows you to lock your interest rate now for an extended period of time. And lenders all have a different program for lock and shop. Some of them are 90 days. Some are 180 days. There's a few of them out there that will even let you lock for up to a year. Now, your reference to getting your money back, obviously, whatever website you were on, you mentioned you were online, there's a fee associated with that. Those are typically the extended, the 180s and the 365-day locks. Up to 90 days, some up to 120 days, you can do without a fee. Almost always a 90-day lock and shop has no fee associated with it. So there would be no need for you to get your money back if you didn't execute on that rate lock by buying a property. Now, with the 365-day locks and the 180 locks where you pay that fee up front, most often that fee is gone. If you don't execute the lock by closing on the property, the lender keeps the fee. And think about it logically, right? So the lender is taking that chunk of money and committing it to you at a specific interest rate. So I know they have billions and billions of dollars to lend, but if you're borrowing $400,000, they've earmarked $400,000 to you, Matt, right? Yeah, Matt. They've earmarked that $400,000 to Matt at today's interest rate of whatever it is, let's say 4.25%. Now, in 6 months, if interest rates are 5.25%, they still have that $400,000. Think about it like it's sitting on the shelf. It's what do you call that when you buy something at the store and you wait to go pick it up? Layaway. You've put that money on layaway. So if you don't execute that lock and close that property, that money's been sitting on the shelf. They could have, in that 6 months or in that year, probably have lent that $400,000 2 or 3 times. Because as everyone knows, most often, once your loan closes, it's not long after that before it's sold to a new servicer. So lenders are moving through that available capital line that they have to lend. So their goal is to lend that money, get you into a mortgage. They'll package that up and sell it on the secondary market. But if that $400,000 has been sitting there on layaway, like that shiny bicycle at Walmart, and every other kid is walking by saying, Mom, I want that bicycle. I want that bicycle. And the Walmart employee says, I'm sorry, that's Matt's bicycle. It's on layaway. There's a fee associated with that. That bicycle at Walmart, there's 6 or 8 other kids that would have loved to take that thing home. So I know that's kind of a weird example. It just jumped in my mind. And sometimes I think in pictures, but that's the best analogy I could come up with is you've reserved that money and you've paid a fee for that reservation, and you don't get it back if you don't use it. Now, I encourage you, let's have a conversation about some shorter term lock and shop strategies, because you can get a significant amount of time with no fee, and then there's no obligation for you to close the transaction. And we do that all the time. We'll get somebody pre-approved. We'll actually even go through underwriting. Your loan is fully underwritten, you're pre-approved, your rate is locked, and you're out there house hunting. Sometimes, thankfully not often, but sometimes you don't find a house. And I've got an instance that just popped to mind with a gentleman named Steven. Steven moved back to Colorado. His life plans changed. There was significant disruption in his life, and he's not here to buy a house anymore. And the Mr. Mortgage team isn't licensed yet in Colorado, so we don't do transactions there. So Steven, there were no fees associated with that lock for Steven, and he didn't. Anyway, long story. The answer to your question is, depending on the program, if you've paid a fee, you're most likely not going to get that fee back. And there are strategies to work around it. I would welcome the opportunity to talk with you, even if it's just a second opinion on something. 561-291-8569 is the Anytime hotline. Again, that rings to my office during the week, 561-291-8569. Or visit the website, www.mr.mortgage. That's www.mr.mortgage. So I'm going to throw it back to Dom, see if we have time for another question.
We do. Real quick. This one's from Lisa. It's a text question. Lisa asks, my boyfriend and I are not married yet, but we want to buy a house now because everything is going up. Can we still use his VA loan?
Hey, that's a great question. So yes and no. Okay. Yes, you can purchase the property, the two of you together. He can use his VA entitlement, but you're not, as an unmarried couple, going to get a 100% loan because he's the veteran. He's entitled to the 100%. So most often with an unmarried co-borrower is what you're going to be classed as, is a down payment requirement of 12.5%. And again, there might be some variations on that. I'm happy to walk you through it. The good news is you still get the VA interest rate, which is always a better interest rate. There's no mortgage insurance associated with the VA loan, even though in this instance, you've only put 12.5% down. And it's a great program. So you can still utilize it, but anticipate having to put the down payment down. Now, if you guys are soon to get married and you're married, that changes things. But in the current situation, as you've asked the question, anticipate a 12.5% down payment because you would be classed as what we would call an unmarried co-borrower in the world of the VA loan. So certainly worth looking at. If you're going to buy that house together and he's got his full entitlement, that's a great option because with just 12.5% down and no mortgage insurance and a preferable interest rate with the VA loan, that's a great loan program if you're able to pull the trigger on that down payment. But any other questions on that, give us a shout, 561-291-8569. That's 561-291-8569, or the website, www.mr.mortgage. That's mr.mortgage. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel, host of the Mr. Mortgage Show, and you can reach me anytime on the Anytime Hotline. That's 561-291-8569. That's 561-291-8569. Again, it rings here when we're in the studio or pushes to my office during the week. And I encourage you to visit the website, www.mr.mortgage. That's mr.mortgageno.com, and you can find us there 24/7. So we had some great questions so far today. I made some notes while we were talking, and I'm going to kind of just do a quick recap. We had Brandon, whose dad was going to let him buy the property from him for just what he owes on it, which is amazing, right? So gift of equity might pull that off with it might be the path of least resistance. We do that strategy a lot. It works really well. So, Brandon, I hope that answered your question. I'm here if you have additional or need additional information regarding that. So, Julio, I think Julio was the one that asked us how much cash he could pull out because he was going to pay everything off before the world catches on fire, right? So we're all concerned with inflation and interest rates, and Julio was going to capitalize on that rec loan and pay off some of that personal debt. And we even talked about how much personal debt people have accumulated since the pandemic. Luckily, home appreciation is outpacing debt accumulation, so you have access to the capital that you need to pay all that off and kind of treat the rec loan as almost an inflation buster, if you will. So, yeah, it makes sense. It makes sense for a lot of people. And I'd love to talk to you more about that, Julio, or anybody for that matter who has questions regarding that. It's a wonderful opportunity to take some of this newfound equity wealth while you still have it. I talk to people, and I don't want to go off on this tangent. It's for another show because I have a lot of opinions about this. But some people I talk to share with me that they believe the housing market is going to crash. And if you truly believe that and you have access to the equity now, assuming that you don't intend on leaving your property during this so-called crash that you think is going to happen, you might as well tap some of that equity now, pay off all the consumer debt, and then you've positioned yourself to live comfortably through the Armageddon that you think is coming. So interesting thoughts on that. I have that conversation a lot, but Julio had thrown that our way about the rec loan. So I hope I answered that question for you. And I am certainly available to talk to you more about it during the week if you like. And then I know, Margot, you and your husband, Tom, have been considering the reverse mortgage. And thank you so much for that question. I know we've emailed back and forth during the week, and you, if I remember correctly, you watched the video at that More About Reverse.com website that we set up for you. So I'm looking forward to continuing that conversation because there's so much confusion, and it's not confusion because you don't understand. It's confusion because people just don't know. They don't talk about it. It's just such a little known loan program. So you can sell your property anytime you like with that reverse mortgage in place. Just think of it as a traditional loan product. You're going to have a lien on your property that has to be satisfied. Matt was talking about lock and shop, and I hope I answered that. That was a pretty easy one. No fees associated with the shorter term lock and shops, but if you're going out to 6 months or 12 months, then most often there is a non-refundable fee associated with putting that money on layaway. I think I used a Walmart bicycle example. I don't know where that came from, but the mind of Mr. Mortgage sometimes gets a little bit out there. But and I think we had the question from Lisa regarding her and her boyfriend purchasing the property with his VA loan, and certainly doable, but not at 100% because you are an unmarried co-borrower at that point, so you'd be putting down about 12.5%. But I'd need to know a little bit more about that to get the specifics together for you regarding the down payment requirement. But still, an amazing, amazing opportunity to use that VA loan in any form that you can, because the interest rate's better and there's no mortgage insurance. So, hey, I hear the siren sneaking up behind me. That means that they are going to pull me out of the studio with my hands behind my back. But I hope those questions were answered and you took some valuable information away from this week's show. Again, my name is Mark Eitel. I am with you every Saturday for the Mr. Mortgage Show. And you can always reach us at 561-291-8569. That's 561-291-8569 or www.mr.mortgage.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.